Zdaj pa k ustnemu nagovoru oziroma v drugi besedi vabim gospoda Tomija De Temmermana in tesnega sodelavca Edesove, ki pozdravljeni, dobrodošli, ki je hkrati tudi strokovnjak za delovnimi in letnimi izkušnjami v Evropski komisiji in drugih evropskih institucijah na področju predvsem delovanja finančnih trgov, bančnega poslovanja in pa kar si sektor ne želi, da bi bil priča, in to je reševanje bančnega sistema, in bo danes predstavil pričakovanje vloge bank pri okrevanju gospodarstva v Evropi in seveda delčka Evrope v Sloveniji. Dobrodošli še enkrat, gospod De Temmerman, in prosim, izvolite, beseda vaša.
Hello, good morning. Do I start now? Sorry, I don't understand Slovenian.
Yes, please. I was sure that you are following us with the simultaneous translation, but yeah, please, you are invited to have a look.
Thank you, good morning, everyone. My pleasure to be with you today. Thanks to the Bank Association of Slovenia for inviting me to speak, and apologies on behalf of the commissioner who couldn't join herself. But very happy to be with you to speak about the role of banks in the post-pandemic context. So even if we have reasons to be optimistic at the moment with vaccination rates or the latest economic forecast, we see with the new measures introduced in some member states last week that COVID is not completely behind us yet, and that we're still in an uncertain situation. The economic shock that was prompted by the pandemic showed that the reforms that we have introduced over the last 10 years on bank prudential regulation have been effective. Banks stayed resilient, and they have delivered some of the public support measures to also make businesses. But as we hopefully move now from recovery to expansion, our job in terms of bank regulation is far from over. If we want banks to remain resilient and be able to finance the economy also in possible future crises, we need to finalize the reform that we decided on after the financial crisis. And that will let us look towards the future and prepare for the change ahead of us. Because the reality is that the world at large and the financial world is changing fast. So if we want the banking sector in the European Union to benefit from this change rather than being overwhelmed by it, we need to take action now. We've seen with the pandemic that came an acceleration in the digitalization of the financial world, and we're also seeing that finance has woken up to the urgency of the climate crisis. So the financial system that we will see in 5 to 10 years could be very different from the one that we have today. But before we talk about the future, we must finish what we started with the post-financial crisis. So, as I was saying, EU banks are more resilient as a result of what we've done over the last 10 years and the high quality supervision that we have. But there are still some gaps that we have to close. So you will have seen that the Commission recently adopted a new banking package that addresses some of the deficiencies that we need in the prudential framework. The first and the most important part of this package is the implementation of the Basel III reforms in the European Union. The main element that remains to be implemented with this package is to limit the ability of banks to excessively reduce capital requirements when using internal models. The reforms, as we propose to do it, will avoid a significant increase in capital requirements overall for EU banks, and they will be phased in over a long period, giving banks the time they need to adapt. The proposal that we make is faithful to the international Basel Agreement, but we're also making targeted adjustments to reflect the specific features of the EU banking system and the EU economy. In particular, we recognize the significant contribution of SMEs, most of which are not weighted to the EU economy, and we're taking into account the fact that European banks finance low-risk mortgages and keep them on their balance sheets. And we're also taking into account the fact that our banks have an important role in financing big projects and infrastructure, and the long-term equity holdings of the banks will not be treated as speculative investments. On top of that, the reform that we propose are proportional and will help reduce compliance costs, in particular for smaller banks, but without losing prudential standards. The second part, the important part of this banking package, is making sure that our banking system is resilient when it comes to sustainability. So we're introducing requirements for banks to manage their ESG risks systematically and consistently. And we're giving supervisors the tool they need to enforce those requirements. And the third part of the package is a series of measures to strengthen supervision. For instance, we're proposing minimum standards for the regulation and supervision of third country branches, and we're taking the opportunity to respond to some of the lessons we've learned following the Wirecard scandal. So I would say that on the prudential regulation side, we're on track to set out to achieve what we set out to do after the financial crisis. But after this financial crisis, we also decided to create a banking union. So even if we've seen that the banking sector was resilient in the COVID crisis, we have to acknowledge that COVID was not a typical crisis. There were extensive measures to support also the businesses most affected, and that indirectly supported the asset quality of our banks. And we cannot assume that we will have the same level of public support in a normal, more typical financial crisis. So if we don't complete banking union, we have no guarantee that the stability we have seen in this crisis that we will have it in the next month. And besides this financial stability argument, I think the banking union can also provide us a strong regulatory framework that can accommodate change, which will be important given the period of change that is ahead of us in the banking sector, and I'll come back to that. So the financial sector is changing fast, and we need to have a system that can foster consolidation where scale matters, including, of course, borders. And we need to ensure that banks that cannot adapt can exit the market in an orderly way without threatening financial stability. And on the completion of the banking union, we still have a lot of work to do. One thing is that we want to strengthen the crisis management and deposit insurance framework. Now we know that the cost of a bank failure should be primarily borne by the bank itself, but when extra money is needed, it's the common safety net financed by the industry that should be used and not public funds. And of course, we also need to build the third pillar of our banking union, the European Deposit Insurance Scheme, because for the Commission, the banking union will only be complete once it is in place. But completing the banking union will require us to make hard choices and difficult compromise, and unfortunately, so far we have not been able to do that, and I hope that this will change soon. So, in short, if we want to navigate the changing banking landscape, the first thing we need to do is complete the post-financial crisis agenda. But if we want the banking sector to be well positioned to embrace the latest technology and support the green transition, we must go beyond that. So as I mentioned, digitalization is fundamentally changing the financial landscape. We have technology companies, large and small, that are increasingly offering financial services. This increases competition, but it also makes value chains more complex. It can fundamentally change banking service supply chains, introducing new critical suppliers and new categories of risk that must be managed. It also has consequences for the business model of traditional banks. We see new fintechs unbundling the full service model of traditional banks and big tech companies entering financial services using data and extensive customer information. So last year, the Commission put forward for a digital finance strategy. We want financial institutions, capital markets, consumers, and the economy as a whole to be able to make the most of new technology, such as blockchain or artificial intelligence, while addressing the risks that are associated with that. I think we've made good progress on negotiating more ambitious regulations for crypto assets and cyber resilience, and more is on the way. I mean, we're getting ready to put in place the building block for a common European financial data space and an open finance framework. In addition to that, the very nature of money is also changing. So money is increasingly digital as cryptocurrency and stablecoins gaining popularity. But for now, all this digital money is private money. So central banks, including we have been thinking about central bank digital currencies, whether we need digital money backed by a central bank in the way that cash is, and how that would be defined. the ECB has launched the investigation phase for a digital euro. And we at the Commission are working closely with the ECB to explore what the digital euro could look like and carefully think about the potential impacts. A digital euro would bring benefit to the citizens, more choice about how to pay, can increase financial inclusion, but there are also big questions to discuss. What would be the impact on bank innovation? How do we ensure that privacy is protected? And how do we keep this digital system secure? So introducing a digital euro would be a big decision, one that we have to get right, and at the Commission we are fully engaged in this work. The other fundamental transformation confronting us, as I mentioned, is the transition to climate neutrality. And there, economy, society, politics, everything will need to change to meet us the sustainability targets that we have set. All our policies must contribute, and that's also the case in the area of financial services. So I mentioned earlier that we use the opportunity of the banking package we have just adopted to also take into account ESG risks. This transformation is fundamental and it will not be easy, but that's why I think that the sustainable finance strategy that we have adopted also this year is very important. It helps all sectors, whatever the stage in the journey they're at, to reduce their negative impact on climate and the environment and manage risks. The climate stress test that the ECB has done, as well as those that we are mandating for the European supervisory authorities and the banks to carry out, will be key to figure out where the vulnerabilities in the financial system lie. We want to know how climate change affects financial institutions, the exposure of banks to biodiversity loss or extreme weather events. At the same time, we also want to know the impact that financial institutions themselves have on the climate and the environment through their financing decisions. Looking at climate risk from both these perspectives will help us make the financial system more resilient to climate change and enable it to make a full contribution to the climate transition. So, if I conclude now, I think we have a lot to do to accompany the change in the banking sector in this post-pandemic recovery. The first thing is that we must finish implementing the reform that we initiated after the financial crisis, because that will allow us to move on from looking at the past towards looking to the future. Because there's many challenges ahead of us. I mentioned only two: digitalization and climate change. But there's many. But there's also a lot of opportunities. I think we have an opportunity now to build a modern and resilient banking system that can be a sustainable source of finance for our economy. Thanks for your attention.
Thank you very much, Mr. Temmerman, for addressing the key developments foreseen to be concluded in the hopefully as nearest future as possible, and hopefully Slovenia is also adding to the speed during its presidency. Whether we further support the banking possibility to support the economic growth. Maybe just a few comments. For Slovenian banking system, especially the fast implementation of Basel in the area of Basel III, in the area of changes or new treatment for SMEs, SMEs is extremely important, given that the economy is based on other countries in the EU, so really waiting for this new treatment that will definitely increase the capacity for risk-taking on the balance sheet, as well as proportionality is obviously extremely welcome, and we are really looking for further steps in the next package of steps that will see the compliance cost with banks that work locally and have a simpler balance sheet to manage. I'm sure you are aware that 70% is on average of the profits of the European banking system, and smaller even more. It goes on the account of the compliance, assuring the compliance with the regulation, which is really overwhelming. So all simplifications are obviously very welcome. We are also looking forward to get a revision of reporting framework that is an important part of the cost and can be absolutely made more efficient for all, including the supervisors. Digitalization and especially transition, regulations that will give further guidance on how to include the ESG factors into the risk management is also a key development that we all together shall work towards, especially also assuring that there will be a sufficient quality of data from the real sector available, and also really important to have comparable standards with the rest of the world. So hopefully the EU efforts that the EU taxonomy will be a base also for the rest of the world in defining the indicators to follow, monitor, and evaluate ESG factors is of a key importance for all of us. I see here a question, a hand raised for a question, and I'm inviting Mr. Jambui to take a word, and then
Thank you very much. Reviewing me, yes. Very interesting your helicopter vision on what the bank had to do after this pandemic crisis. I share completely the view, the digitalization, the threat from new system payment, new competitors, and so on and so forth. I would like to ask you one point, very simple. The decreasing of the crisis, the pandemic crisis, the decreasing of the consumption determined sure an increasing of the deposit from the company. So this is a very, very new part of the pandemic situation. My question is, at the European level, what you are thinking about how to address this new amount of deposit to the economy? What is your indication, your thinking about this point? Thank you very much.
Thanks for the question. I think it's a very relevant point, and so we have seen deposits being accumulated during the pandemic, and one of the objectives we've always had with the whole capital markets union is also to make sure that we can increase retail participation in capital markets, but in a way that is safe and where retail investors are properly informed. So you may know that we have also an initiative on the side of retail strategy for retail investments that we have scheduled for next year. So I can't give you all the details yet, but that's something we're looking very closely to make sure that we can also, in view of the changes that I described, of digitalization, the new ways of investing, that we can have an engagement of the retail actors on capital markets at a time where our companies will also need new investments in the recovery, but making sure that consumer protection, information, and financial literacy also keep up with this change in the technological environment. So I can't give you all the answers today, but stay tuned, and we'll come to that.
Thank you very much.
I will have to leave you now. Sorry, I have.
We have exceeded our individual time. Thank you very much, Mr. De Temmerman, for your time and joining us for the conference, and looking forward for our next meeting. Thank you.